what's going on, everybody? Christopher Inks here, TexasWest Capital. I've got Andrew and Tillman, of course, from Arch Public. But notice, remember last week, Tillman said, hey, listen, it's not fair that you get to get up there first and say things before you bring us up.
I didn't say it wasn't fair. I just said it was a power trip, and it was.
It wasn't fair. That's what you're saying.
The squeaky wheel got the grease. And by the way, I didn't mention it once. I mentioned it 5 times on 5 different episodes.
And notice what happens. So I step up and I say, you know what? All right, let's bring you up here right away. What did Tillman put under his name? Absolutely nothing now. We finally got him to put out there some mention of Arch Public because he is in there. Sometimes people come on there and they're like, okay, Chris is from TexasWest Capital, Andrew's from Arch Public. Who's this Tillman guy?
This is coming from a guy who had TexasWest Capital's intro for a year in front of the show. I mean, Andrew, back me up here. What are we talking about? This is Beards and Bitcoin. This isn't Arch Public. If I needed to say Arch Public, I'd be on an Arch Public only podcast. We talk about a lot of stuff on this thing, you know.
Listen, I'm still stuck on Uncle T has low T. I can't move off that yet. I can't move off that.
See, this is what happens when you discuss things, prior to the show, folks. They bleed over. Listen, before we get going here, we're really excited to have you all with us. Please do me a favor, or do us a favor. Follow along, hit the thumbs up, hit the like, hit the subscribe, and share the link, guys. That is the easiest way to kind of get this out there. And, if you've been here, we like to have a lot of fun. But at the same time, we try and give you as much information as possible about what's going on with Bitcoin this week. Sometimes we talk about price. Often it's about other things, that are related to Bitcoin. Sometimes we even stray a bit and we talk about XRP and how much Andrew hates it. And we talk about IULs and how much Andrew hates them. We talk about other meme coins and how much Tillman loves them. So
we talk about black sweatshirts and how much Andrew loves them.
That was my thing. I couldn't do it, man. He showed up before the show and I couldn't think straight. He's got the long sleeve t-shirt on. He's got a gray hat on.
Listen, I'm about 2 episodes away from showing up to the show topless.
Oh, God.
Andrew told me something backstage that his idol growing up was Will Smith. And when he saw Men in Black, it solidified him. That movie is what shaped it.
There's been multiple times. Been multiple times in my life I wanted to have one of those little sticks. It was all right, we forgot all that. Moving on.
Oh man, but hey, listen, you either do it 150% or you don't do it at all, right?
Mm-hmm. That's right. You tell them, Chris.
Don't ask permission.
I guess wearing no color is doing 150%. That makes a lot of sense.
So bringing it back to something serious, I didn't set my timer or anything, but I have CNBC on in the background, and I could hear the sweet sounds of Tom Lee's voice. It grabbed my ear, right? And I thought, Tom's on in the middle of the afternoon. So I turned around and I watched for a while. And again, the guy is more right than not. And some of the things that he was talking about, were pretty extraordinary. He talked about the fact that, there's a significant amount of shops still on Wall Street that are, at best neutral, at worst still bearish about the markets. And we're sitting at or near literally near all-time highs across the board. Yeah. Even Bitcoin is a couple percentage points away from all-time high. He said that's not a tenable position to take. So at some point, there's going to have to be a shift that's going to be quite significant across Wall Street associated with the commentary having to do with markets. Because if you step back and you say, okay, the markets dealt with tariffs, the markets dealt with the election, the markets dealt with Iran, bombing Iran, the markets dealt with, a plethora of things over the last, let's call it, 18 to 36 months. The markets dealt with inflation. The markets dealt with all of those things, right? At some point, you have to, adjust the way that you think and basically say the level of resilience associated with the United States markets, the S&P, the Dow, the NASDAQ. You either choose to see with your own eyes what's happening and then make meaningful prognostications and actions associated with that, or you're just at some point somebody's got to call you stupid. So it is, his point is the markets are exceptionally resilient. The idea of, it's not the right word to talk about markets associated with, institutional commentary, but FOMO at some point will be a thing in the way that they adjust how they talk about the current market environment. It's nearly impossible to be bearish at new highs. It's kind of embarrassing, was his point. And so FOMO will turn into a thing, and we'll see another leg higher and another leg higher. Because, by the way, we've seen another leg higher and another leg higher now for, I don't know, a decade and a half and change. Same thing happening with Bitcoin, right? So it never ceases to amaze me how Bitcoiners at large can get bored with Bitcoin so quickly every cycle, right?
Yeah. I just think that's part of being myopic, right? When you're looking at one thing, I don't care how action packed that one thing is, it kind of gets boring. And I'm taking cues from I look at VC funds, and I look at funding of businesses, and I look at where the money is flowing, because you know how the old saying goes, there's a lot of stuff that talks, but money, money's the only thing that really talks. And so you follow the money. Well, we've seen huge acquisitions and spending going on in our space. I mean, massive, unprecedented. Every week, every month, it's a bigger number, bigger acquisition, bigger platform, bigger integration. And so you just have to follow that. You just have to go, okay, those spigots have turned on. Well, interestingly enough, since the Bitcoin conference, 90% of my time is spent on Bitcoin treasury corporate strategies now. That's another huge indicator that the spigot is turning on, that the money that's attached to Bitcoin treasury type companies. I don't know if you saw David Bailey's post yesterday, but they've funded 30 Bitcoin treasury companies in 30 different markets. That all have, the resemblance of Nakamoto and what their strategy is. So just follow the money. It's pointing in one direction, which is up. And so I look at that, and then I look at we've got some exciting stuff at Arch Public that we're going to be a part of here in the near future on the Treasury front, and we're going to be able to talk about it not now, but hopefully here in the next 30 days. But it's really impactful to every industry, okay? But what it does is it opens up more liquidity to those given industries. And so the amount of liquidity that's starting to flow and starting to unlock, to me, is just the most bullish thing that you could possibly point to. Because again, people don't start writing those checks unless they can see an ROI in the near future for them on those checks. And the only way they see an ROI on the near future is if they see adoption curves heading that direction, and they think they can get a meaningful piece of the market share of this new industry that's literally being birthed in front of us all. That adoption curve is the strongest indicator if price go up, period, the end. And so I think adoption curve is not only getting force fed to us through the rising tide floats all ships methods, and the fact that Coinbase is now publicly traded on the S&P 500, which is now being added to every retirement account, every 401k, every IRA, every major, fund. So that's going to be a natural evolution of capital gravitating towards these asset classes. But now you see the interoperability of the traditional markets being added to the crypto exchanges. I mean, let's not get lost in the fact that in the last month and a half, 3 major crypto exchanges have announced that they're going to start trading tokenized stocks.
Yep.
I mean, we were, in my mind, if you asked me 6 months ago, hey, Tillman, when's the tokenized stock thing going to come to fruition? I would have said, well, Citadel and BlackRock are doing this thing in Texas, and I don't know, they're probably going to get it around 2 years from now. It'll probably be.
Yeah.
That would have been my answer 6 months ago. It's happening right now. I mean, you can go do that today if you don't live in the U.S. And if you do live in the U.S., you're going to be able to do it in the next 90 days. So
a data point associated with capital moving around in the space, and these are 2 really important data points because it tells a story, right? Instead of just theory. About 3 years ago, we lived in a world where the largest sort of acquisition price paid inside of crypto was when Binance bought CoinMarketCap for $400 million. Okay, that was the biggest that ever existed. 6 months ago, Coinbase bought Deribit for $2.9 billion.
Yep.
Okay.
That's what I'm talking about.
So that is nearly a 10x to the upside associated with capital, liquidity, price, valuation, all of those things, right? All of those things. And by the way, Deribit was effectively an institutional type level leverage in crypto futures, with perps, right? As a perp house. So, again, those are 2 data points that matter. 3 years ago, the top was 400 million. We have no idea Deribit, the Coinbase acquisition, is going to be the top, but that's 2.9 billion. And there is going to, so think about that, right? So Deribit will have some version of $2.9 billion. Coinbase, their currency continues to go up and up nearly every day associated with their stock price and the equity value associated therein. There's going to be 3 or 4 or 5 new crypto companies that go public in the last half of this year, the next 6 months. That currency will begin to wash through. Circle, again, it bounced up to 300 and change or whatever it was, or 250. Now it's come down, but still, if it's at 118, 120, wherever it is today, it's significantly higher than 24 to 27 that it was indicated on IPO day.
Exactly.
So all of that capital again is it's going to make a meaningful impact in the space, no doubt about it.
Well, how about the 90+ billion in capital that's been injected into treasury companies in the purchases of essentially paper Bitcoin? I mean, that's been the story of the year as far as fundraising has been. How much? When I kept asking myself, when is the spigot going to turn off for old Sailor Boy? Like, when is enough enough? And it seems like he's attached to the ocean. There is no cap in terms of the liquidity. There's an insatiable desire for more and more paper Bitcoin instruments. And the fact, if you just take what he's done and you go, mind blowing, right? How about Pompliano? Largest out of the box raise last week, $750 million to mimic these guys. There's not an end to this in sight. Like it feels very reminiscent of being attached to the ocean. It's like the bigger the number is, the more attractive the instrument becomes, because there's critical mass there, and Wall Street's looking for these massive vessels to put the capital in. And these are essentially, like, in my opinion, kind of the first, if you look at BTC as a network, right? Look at these as the cargo ships of the network. They're carrying massive loads of cargo, and some of it's on debt because it's merchandise that's going to be turned into something that, like, it's going to be a very complex ecosystem, but the amount of capital that's being attached to it is just mind-boggling. It's just off the charts. And
so we add that, we're sitting here, basically, what are we talking about? We're talking about money flows, right? We're talking about where is all this money going. And something else I brought up with the guys here right before the show began was that right now, money market funds, everybody's like, oh, it was 5 trillion sitting in the money market fund, blah, blah. It's up to like 7.4 trillion now. And about half of that is retail money sitting there. So you're looking at that coming in. And then you also look, I mean, now obviously that's not all going to go into Bitcoin, but I think there's a good chance a decent bit of that's going to go into these Bitcoin treasury companies.
It has to, because the liquidity is just like rainfall, and this is a bucket. It's going to catch some of it, period.
And then we have, what basically the title of the show today is, there's a metric that we tend to look at, which is long-term and short-term holders of Bitcoin. And usually those diverge. And what's happened now is all of a sudden they're both accumulating. So if you've got short-term holders and long-term holders both accumulating right now, right below all-time highs, you've got a ton of freaking money just sitting out there. I mean, maybe it doesn't happen this month, maybe next month, but what happens all of a sudden, especially when Powell finally says, listen, quarter-point rate cut, probably in September.
You just hit the nail on the head. Listen, I'm telling you right now, I can predict this with almost absolute certainty, that we're going to see a rate cut correspond with a big amount of money injected into the economy at the same time. And when you get that going, I'm telling you right now, all my smart friends in real estate, they are all pointing to some very, very key legislation that has been extended since Trump's been put into office this second term. And there's a lot of value in that legislation, let's say. And the point is that it's another spigot that's about to get turned on. When rates go lower and the banks don't have to abide to post-2008 lending regulations, and we can go back to signature loans, just wait until the amount of liquidity that unlocks in the real estate game and the development space. Because that's where, in my opinion, if you look at some of the legislation that's attached to real estate development specifically, that's where you get major change in top line growth. Like the interstate system is a good example of that, right? When you build a set of roads that connects every state in the federal highway system, what happens as a byproduct? A lot of interstate commerce, like people start shipping stuff places. Yeah. That's the same type of thing that's being created. It's a network of value that can be transferred. And just wait, we've got maybe like 4 nodes hooked up. Like we got Coinbase, Kraken, Gemini, pick the other 4th that really is, Robinhood. So you got 4 major players in the space. Wait 10 years from now, every single financial institution will be in this category. They'll all be trading tokenized stocks. There will not be any more traditional exchanges. Why? Why would you? What advantages does it pose? Why would you want to trade something that's going to cost you more, execute with wider spreads, have shallower liquidity pools attached to it, and have basically a delay in settlement? Why would you want that system over a system that's like push button, instant, anywhere in the world, transfer the value anywhere to anyone, permissionless? Like that is what's going to happen. So we're just at the very beginning edge, and it's crazy because we point this out all the time, but there's enough news stories that are happening in a week's time for the entire year we could be spending on this stuff. I mean, it's deep stuff and wide, and it's not stopping. I mean, just wait until I'm still waiting, and it will happen, in my opinion. Like I would put a very high probability on this, that there will be an announcement sometime in the next 3 years that says, the U.S. government's bought X number of Bitcoin from the Treasury, and we've figured out this fancy way to do it budget neutral. I just think that's going to happen. Why? Because there's a lot of smart people trying to make it happen. And when when they have the latitude that they have to move inside the space, there's no way that some of the waste and fraud and some of the money that is being poured into some of these, outdated agencies, if they divert that to buying some Bitcoin, I'm sure that there is one of those agencies that they can get bipartisan support on dismantling. Like, I just think that's going to be an inevitable thing.
Yeah, I do too. And that's not the only thing, because when you're talking about that, especially when you're talking about Bitcoin, what we're really talking about is this move now to energy, right? And this is something I've started writing more and more about lately, is this idea of Bitcoin, proof of work, stuff like that, kind of along the lines of what Software, Major Lowry's thesis, was about. And this idea, again, where we kind of, as we go forward here, we start looking at hash rate, and we start looking at, how do we shore up hash rate? President Trump out there said, listen, I want to make America, and we said this many times, we've repeated this, I want to make America, the world's top crypto mining, Bitcoin mining place. And there's a reason for that. When you look at that, and then you look at him mention strategic reserve, and you look at when he said that, then they found those memos with the Fed and whatnot, and they're talking about strategic reserve Bitcoin, and then of course Trump's out there talking about it. It doesn't happen overnight, guys, but I'm telling you right now, if you've got the government talking about that as a strategic reserve, and then you got Trump at the same time saying, listen, I want to make this the Bitcoin mining capital of the world, we are talking about onshoring hash rate. And hash rate, we're talking about energy hash rate as a deterrence when you talk about cyber warfare and whatnot. So
you're using a finite resource to secure data. And so people ask this all the time who think they know about Bitcoin, but they've never run a node, they've never run a miner, they don't really know how the network works. They'll say something like, well, quantum computers are going to crack the SHA-256 code eventually and make Bitcoin obsolete. And they don't understand. Let's just say you're right. If you crack SHA-256, that gets you access to one block, the current block. That's it. In order for you to get access to the second block in the chain, you've got to have the computational power and energy of the cumulative of the two blocks. If you want to go back 5 blocks, you've got to have the computational power and the energy to go back the cumulative of the 5 blocks. And by the way, you've got a running 10-minute clock to do that every single block. And you got to start over. So when people say SHA-256 protects the network, that is not correct. Energy protects the network. And the amount of energy that you would need to go back to the Genesis block doesn't exist in trillions of years of the existence of our entire universe, harvesting 100% of the power to go solve that problem. So quantum computers are still bound by the finite resources of this universe. And the amount of energy that you're building as a security measure in these proof of work blockchains is the cumulative energy spent, not the SHA-256 protocol. That's just what's protecting the current block. That's it. So we can adopt a new, a quantum resistant SHA-256. But the amount of energy you would need to go change the ledger of the blockchain and become Satoshi Nakamoto. I meet with people all the time, and it's amazing how many smart people get duped into meeting with these eggheads that tell them, I've broken the Bitcoin code. And I have to listen to this junk. And I meet with these people, and I'm just floored with how dumb really people are about the network. But that is the beauty of Bitcoin, and that is the irreplaceable quality of its existence, is that you cannot come up with enough energy in the entire galaxy to go compute against what's already been computed on chain. That is the value. And so saying, yeah, but I can just duplicate Bitcoin's protocol tomorrow and create Bitcoin 2.0. Yeah, but you can't duplicate the trillions of kilowatts of
Exactly.
power that secures that network.
Yeah. Yeah. And I love that you put that up, and I was talking about there because, 2 days ago, the 7th, I put out a tweet and I said, today's cybersecurity playbook is a never ending patch and pray routine. Hackers need one lucky exploit. Defenders need flawless code. Proof of work turns the tables. So to rewrite Bitcoin's ledger, you don't just run a script. You have to match every joule the network has ever burned, which is exactly what you're saying here. So, picture a thief forced to build a full-scale replica of your house brick for brick before grabbing your cell phone, right? You put a government-run mining fleet on idle hydropower, and you build an energy moat no keyboard alone can cross. So in the end, physics beats that code, right? And I mean, that's exactly what we're talking about here. It's this idea that you have to reproduce all that energy that's already been spent or to do it. And that's where you get this. This is where you kind of move this into hash rate, into energy from where we've been, right?
That's why government should be very, very confident in their ability to control blockchain ultimately. And the only thing they would have to control is the fair and equitable, production of or security. So it would become an issue of national security. We would want a specific number of hash rate functionality as a percentage in the network at all times, and we would constantly be building that capacity as the network grew. That would be, I think, that is something that's going to happen in the future, in my opinion. I think it's a foregone conclusion. It has to.
Yeah, I wrote something here recently, so I've got me, all I do is write, right? I write and I watch stuff. And so I wrote this kind of this smallish essay called Hash Force Doctrine, Why Proof of Work Matters to National Defense. And if you guys follow me on X, at TXWest Capital, you can get on that, or you can just go over to hashandhedge.substack.com and get in on that and give you, and I'm using that as kind of like my place where I'm going to give my longer form thoughts on Bitcoin, things like this. But again, we go in there and we start talking about that. And in that, I wrote that, look for that, fiscal year 2027. Start looking for, some kind of line item there in the Pentagon, in the Pentagon's budget there that starts talking about that sort of thing, right? I'm not sure exactly what it'll say, but, you want to look for that right there because the talk is so strong right now. We already got 25, 26 kind of fiscal year stuff figured out. So, when we're looking at that fiscal year 2027,
I want to take a point here, and I'm going to give some free education to our audience, maybe some young guys out there that are early entrepreneurs. There's two ways to get products sold. One is in the CapEx side of things, and one is in the OpEx side of things. And the harder of the two is the CapEx side. So if you come in with a product like what the government said is we want to buy it in a budget neutral way. If you come in and go, hey, we want to spend X number of dollars on Bitcoin, right? That is a CapEx expenditure. That is capital that's going to have to be allocated towards that purpose in a future year's budget. That is a long process. That gets done very slowly, like what Chris is talking about. If you want to get your product sold immediately, prove to that company how it makes them money that pays the bill. That's why companies have finance agreements. That's why automobile dealerships don't only deal in cash, because people have to drive cars. So they're willing to pay a finance fee and to pay the interest attached to that loan in order to drive a car. No different than an Uber who's making money on their car is willing to, if he's an Uber Black, take out a bigger loan and pay more interest because he's making money on the top of that. It's working underneath his OpEx budget. He's cash flowing that asset every single month. That's what Elon's trying to do with his Uber, with his, self-driving cars. It's like you own the asset, it drives you to work in the morning, but the rest of the day it's out there earning you money as a taxi, a self-driving taxi, right? That turns it from a liability into an asset, that turns it from a CapEx expenditure into an OpEx profit center. And so if you're out there and you're struggling to try to place a product because people keep telling you things like, we just can't afford it this year, we really like it, and we'll talk about it in budget meetings for next. That's when you have to figure out how to finance your equipment and how to prove to them how it saves them enough money for that monthly finance charge that they're going to be charged. If you can crack that code, you will sell a lot of product. That's
yeah. And I think that's what, the big thing with the Pentagon right now is, okay, this is great. We're thinking about, we're looking at it. It makes sense. But is it going to cost us less than what it costs right now to drop warheads on foreheads, right? I mean, that's really kind of, I think, where the Pentagon's looking at it. And I think they find out that it does. I think they, at the end of the day, they find out that it does end up costing less. And that's really, at the end of the day, what they need to do.
There's a third way that you can sell product, and it's basically this: I can get a good look at a butcher if I put my head up there, but it's the Tommy Boy.
It's always a Tommy Boy quote.
Yeah, it's the Tommy Boy effect, right? I mean, you've got all these other theories, but that's the way you do it. Hand-to-hand combat.
Listen, it's a quality brake pad, buddy. Don't get it wrong. It's about the product. It was a quality brake pad.
I can put a guarantee on the box, and
that anybody who's not seen Tommy Boy right now is like, what the hell is wrong with these guys?
If you haven't seen Tommy Boy, you're not a real American. Okay, if you haven't seen Tommy Boy, you're missing out. Right.
I don't know. I have watched it we had a pastor that came and stayed with us for a while, and we were all watching it, and he looked at me like, you let your kids watch?
Well, we're getting them adjusted to the world. All right. So I mean, I think the bigger outtake here is, a lot of people that come into the show and maybe even follow us online, purely think of Bitcoin as as a price go up thing, right? How can I make money on this as it goes up? But I think what they're getting to start to understand here is, if you're involved in Bitcoin, you're a part of something bigger. And that bigger, may just explode pretty quick here, bigger. And that's going to end up making your price go up as well. I mean, think about it. If the government comes out here, if the Pentagon's out here and says, listen, hash rate is where it's at, we're going to push that. Oh my God. You're going to see Bitcoin mining companies. And personally, if we look at Texas does most of the hash power here in the US, and like a third of the worldwide global hash power comes from Texas alone. So if you're looking for, Texas companies that are based here in Texas and doing it in Texas, I think that may be the best place to kind of look to jump in there if you think this is going to do what we're talking about here, and really get on there.
There's a lot of flare-off gas energy in Texas that can be repurposed. There's a lot of wasted energy when you get oil out of the ground, is the point.
Yeah.
There's an ongoing narrative on crypto Twitter right now where not everybody, but there's a certain group of people that are trying to get ahead of where the Bitcoin treasury thing goes, right? There's people that are saying, it's the next bubble, it's the next whatever. And I think short term, I just think they're wrong. If they're trying to get ahead of it, they're trying to get way ahead of it, a year or two ahead of it. And then there's some fundamentals associated with, are they right or are they wrong, right? So if you've got Bitcoin treasury companies, you've got Bitcoin ETF inflows, you've got states, you've got, nation states, you've everything in between. Oh, by the way, those Bitcoin treasury companies at least are set up to continue to buy Bitcoin on an ongoing basis, right? I would imagine that a large part of their thesis is a hope that Bitcoin trends a bit lower at times so they can get in at a better price. They're just going to keep buying, right? So the idea that it could be or is necessarily a bubble, we're a long ways away from that. I think we are a long ways. Just looking at price action in the immediate, right? and Chris, chime in here, when I finish, just from a technical standpoint, for price action to go to a new all-time high, let's call it a couple months ago, and to be 2% away from that right now, and the only meaningful dip that we had was, let's call it 10, 11%, when the United States bombed Iran. Okay, the United States bombed Iran, and we had a tiny little blip in price action, which, by the way, didn't stay under 100K for the full day. That's why we have 31 days in a row above 100K. This is so far removed from every other cycle we've ever seen with Bitcoin that it's shocking that we're not talking about it more. To be where we are, when there were no bombings of Iran in the last cycle. None of that stuff happened before. It was just the normal course of action. You got up to 69, a little bit of a blow off top, and now you're back down in the high 30s, 40s, because that's just what Bitcoin does. None of that is happening now. None of it. Right?
Well, I mean, we retested 75, which was the previous high, and the previous, what turned from resistance to support. And where are we now? 109. That's not a bull run. I'm sorry. That's literally the place you get in after the retest has broken out above. Like when it breaks 112, you get ready, strap in, guys. I'm just telling you right now. I think we could see the first, of many $10,000 candles. I think we could go from. I think we could snap from 112 to 122, for example. And I think we would, play around in there, and we could snap to 132 very quickly. And I think you're going to see these legs, and they're going to be different than the God candles of the past. But they're going to still make jaw drops. In my opinion, this is just obviously my speculation.
But even with that, the God candles of the past were, similarly greater than the God candles, the God candles before then. When you look at the moves when Bitcoin was $100 versus the move when it's 1,000 versus 50, and but I think it's important we say this because most people, most retail especially, that's looking at Bitcoin goes, oh, I don't want to get in it because I can't get 10x from here. They're at this number bias because for most of them looking at it, $100,000 is a big round number. That's not $1,000. It's not $100. It's not $10. This is significant. And I think the sad thing about that is they go and they try to jump into these shit coins and they go in there and almost all of them lose money on the shit coins, where if they just put it into the Bitcoin and let it go, and give it a little room to breathe and time to move, they're going to make money on that. And
it's like I said on the last show, when Nvidia went from, 500 billion to $1 trillion company, I shouldn't get in. It's $1 trillion company along with Apple, Microsoft. So I shouldn't get in. It's moments away from being the first $4 trillion company in the history of markets. Right. So you would have missed out on a 4x.
And Tesla's the same way. I'm guilty as charged, man. I've looked at Tesla 100 times and said, nah, there's the blooms off that rose, and then been going. But you talk to people, and people's sentiment out there is like, and I see it now with this whole like self-driving taxi deal. If he's able to pull that off, it will change the automobile industry forever. I mean, forever. People will be paying bills with their car without them in it. That is just, that's jaw-dropping stuff. So I think we're going to see, these technologies at a quicker and quicker pace, because AI is helping people at a quicker and quicker pace. I don't know if y'all saw, but Michael Saylor said he's come up with pretty much everything he's come up with by playing with Grok first and like bouncing all of his ideas off Grok and then solidifying that to something that he can hand to the lawyers and go, will this pass? And,
And that makes sense. I mean, you toss it into AI, let AI do the quick computations. And, you don't want to just run off AI as one end all be all, but man, it's an amazing place to start, especially if you have bigger, more robust ideas you're trying to flesh out in your head, right? And
well, it can be an assistant for you.
It
can't be the creative director because that's you. But it sure as heck can be the assistant and be one that has a PhD in pretty much everything that you ever could want.
And you get
that's
return like that.
Yeah.
I was snapping. It wasn't making any noise, but I was snapping. But yeah, so absolutely. And, again, for those just joining in, if you're into Bitcoin, you're into something bigger than just mere price appreciation, guys. Yes. You are on the precipice here right now. We are in the process of literally everything changing. We've talked about today, and not just with Bitcoin, but, what you were talking about earlier, Tillman, about the real world assets, about stocks, getting tokenized, about, exchanges going 24/7, Coinbase buying Deribit. Coinbase has got 22 hours of live futures, I think now. I saw an email the other day about it. I mean, we're doing all this. We're talking about the government, strategic reserve. We're talking about Pentagon hash rate, holy crap.
Yeah. Well, people say this all the time, and I've got a new analogy for the intrinsic value of Bitcoin, because people always say it doesn't have intrinsic value. It doesn't have intrinsic value. And you can even say, like, now, well, does collateral have intrinsic value? Because it's being offered as collateral on banks. I mean, that definitely has intrinsic value. But I almost wonder if Bitcoin was introduced to the world in a different way through a device. Like, what if I said to you, 20 years ago, I brought to you a phone and I said, hey, this is a cell phone, but it doesn't do voice calls. It sends money, and it sends it without any banks, without any credit cards, sends it peer to peer. You can settle it right in front of somebody who you want to send money to, or you can do it over the entire world. What would be the value of a network that could email money securely to anyone in the world? No one would be questioning the intrinsic value of that network, only because they were holding a stupid device in their hand that they could see and touch and taste and feel. Bitcoin is that, but you don't have to buy a stupid device. It's literally encrypted code words that you can memorize in your head, and you become the device. It's even better than that. And so the intrinsic value, I think, for most people is lost, but it won't be when other networks start failing, because they will. That's the nature of networks. They eventually scale to a failure point.
Yeah. And what about Dorsey? I mean, Dorsey just released BitChat, right? BitChat is this peer-to-peer Bluetooth kind of technology. And immediately Bitcoiners jumping on there and sending money.
That was an unfortunate decision on the naming of that particular brand. BITCHAT. I don't know. They may think that one in my mind.
Yeah, listen, when you said it, I was like, man, that doesn't sound like a Bitcoin
going
product.
Sideways on us here today. I was here to Bitcoin.
Is that a new grinder?
Well, seriously, if you look at that, almost immediately, Bitcoiners jumped on that and started sending back and forth, right? And I mean, people like, oh, well, what if EMP? What if all this kind of stuff? And we're like, well, the great thing about that is, guess what? Even if the network were to go down for a year or 10 years, guess what happens the moment you fire up the first node? We're right back. I mean, it's like, you try and do that with your banks. I think you're kind of screwed, if you get those things with your bank.
Well, and think about it more like this. If the banks go down, you're at the mercy of them to go back up. When the Bitcoin networks go down, you're at the mercy of yourself to go back up. And that I would bet on the community preserving their value more than a third-party custodian preserving the value. I'd always bet on that. Yeah, exactly. Yeah.
Andrew, I know before the show you were talking about Melon and what's going on over there. You want to
So a couple of things. One, I was on a podcast yesterday with Jeff Park, and we talked about the idea of mergers and acquisitions and culture and all that stuff in the crypto space. And do we find ourselves in a position where, do TradFi organizations end up buying crypto organizations, or do crypto organizations end up buying TradFi? Right? Because we've seen there's been moments in time where either or has happened, right? So AOL bought Time Warner, terrible idea and didn't work out in any way, shape, or form, but it actually happened because AOL's currency was significantly more valuable than Time Warner's currency.
Yeah.
So, do we find ourselves in a place where there's going to be mergers and acquisitions? There's no doubt about it.
Let's break down the problem. To me, it's about risk premium. And this industry carries such a huge premium in acquisition costs. The number's going to have to be really big. Somebody's paying a premium because of the potential value of what they're doing, right? And so I would venture to guess that it's going to depend upon how creative the CEO or the board is of those companies. If you've got a really forward-thinking board and they've got a ton of cash, like GameStop, and maybe they don't have the stomach to buy $2 billion worth of Bitcoin, but maybe they have the stomach to buy a crypto exchange for 2 billion, or there's all sorts of way that liquidity can get to the market. And I just think it's going to be based upon how forward thinking the CEOs are. If they're real hudge-pudge old finance type guys, they're not going to pay the premium that this market demands, and I think they're going to be left on the sidelines until they see more rational evals. Basically,
you bring up GameStop, and Jeff had a real world experience with GameStop. He's like, whether people realize it or not, but GameStop has become the place associated with where Pokemon cards are purchased. So he was walking through somewhere and there was a big long line around the corner, and he's like, well, what is this? I wonder what this is. And it was GameStop. And he's like, well, what game has come out? Yeah. And it wasn't that a game had come out. There's a new set of cards that were coming out and people were going to that. Now, even I think that is foolish. I'm like, I would never stand in line for stupid Pokemon cards. But the reality
it's utility, is, and it's
there is value associated with those cards. Period. End of story. It's no different than how dumb I thought it was when Van Eck was ringing the bell, either at the NASDAQ, I think at the NASDAQ, and they had a pudgy penguin that was standing there with them. I'm like, what in the world are they doing? But here's the thing. There's a Pudgy Penguin application for an ETF associated with Pudgy Penguins. Now, who am I to say what is accrued value and how do people generate returns, right? So Pokemon cards, you're generating returns. Pudgy Penguins, it just kind of is what it is, right? So we will find ourselves in different spots associated with different levels of value, and how that value ends up finding its way into the markets. And
I think what we're seeing is an evolution of an age-old marketing scheme, which is mascots, right? How many brands represent themselves in caricatures, in cartoon characters, in mascot form? All of these companies do. And so, this is the test waters of, okay, how do we attach ourselves to this new digital collectible caricature world? And I think, it's going to be norm. It's going to be the standard. And think about it like this. How many barns and thrift shops and garage sales do you go to in the Southeast, in Alabama, in Mississippi, in Georgia, where you don't see old Coca-Cola memorabilia or old Ford memorabilia or old gas station memorabilia? There's big money in that. I mean, you just watch those shows like The Pickers or whatever that show is. Like, it was a big deal, and people are out there spending big money to decorate their barbecue shop with authentic, barn stuff, basically. I think that there's this digital aspect of that. Like, think about if Coca-Cola's original brand, when they came out with the original Coca-Cola, and as they've evolved, imagine if there was an NFT collectible version of each of those evolutions of their script and their logo and their commercials, and you could own a piece of that. Like, there would be a huge collector's market for that. Huge.
Yeah, and I mean, even before Van Eck with the Pudgy Penguin, I mean, what was it? It was Franklin Templeton with hat, right?
Yeah, you're right. It's so where do we go from here, right? Where do we go with ETFs? A reminder again that in 2024, the most traded ETF on the planet was 2x long NVIDIA. Right. So that's the gamification of markets.
Yeah.
So, we're at the renaissance of the gamification of markets. And to that end, a Pudgy Penguin ETF is at some point going to come to market. It's bizarre to say that, but it's true, right? No different than 5 to 7 years ago, there was 95% of the investing
Andrew,
public
listen,
thought it was bizarre that Bitcoin existed, thought it was bizarre that Solana or XRP or any of these, magic internet money meant anything. They thought it was weird, right? That doesn't mean, though, that there isn't value and that there aren't pockets of value that turn into significantly more than pockets of value, right? So where do we go from here? I don't know. But again, the gamification of markets is here, and it's here to stay.
Well, it's really the gamification of life in every way and manner. Like, people want thrills, and people want, like, this is no different than the kids' version of Fortnite. My kids are crazy for the skins. I don't know if you guys have kids.
Yeah, my son used to be. Yeah.
Okay, so my middle son, I told him the other day, I was like, hey, you should be investing your money in Bitcoin. Don't buy any more skins. And he likes to take his allowance, and he likes to buy these skins. So I said, hey, you should go tally up how much money you spent on skins in Fortnite. I'm not going to air his business on the podcast here, but I will tell you, it's a meaningful amount of money, very meaningful. But here's the thing. He goes, but Dad, I could sell this account for money. The kids have already got this. They've already been trained in the ways of digital value. And this is nothing new for them. This is just a cleaner way to do it. And it's a way in which, like, you're in the future, instead of going on to Pump Fun and creating a stupid meme coin that says, Elon sucks instead of Musk, and people buying that, you're going to go on there and you're going to sell your Fortnite account. You're going to put on there, I'm creating a token that is this Fortnite account that has all these things, and it's going to be a digital contract that's going to transfer ownership of your Fortnite account when somebody buys it. That's where we're headed. And you talk about connecting money. Connecting the kids' money to the adults' money, and oh man, that's a dangerous cycle. That's where adults start. I have a bunch of friends that have teenage boys that are really into the collectible cards with them, and they've put thousands of dollars into these things, and they do it as a hobby with their sons. And guess what? If you start seeing these Fortnite accounts being traded as meme coins or being created and digitally transferred, you better believe adults are going to get into the business, and there's going to be digital shops out there aggregating value, selling huge bulk accounts, and then creating new storefronts that have all these accounts that you can come in and peruse and go, oh, this guy has the original skin from season 1, episode 1 of The Mechanic with the blue hat. I want that one. Oh, that's $1 million. Done. Bitcoin transfer smart. Like, that's where we're headed. But in everything.
Yeah, no, and I agree there. Again, my son, he's 14 now. So he was really big into Fortnite there for a few years, and I'm like you, man. I'm like, oh my God, as much money as you spent on it's ridiculous. I guess as much money as I spent on it for him, but whatever. And then he moved on to Apex Legends. And now he's even me, I'm going to say it, wasting his money on Roblox.
Yeah.
He still does that, but he also collects, Pokemon cards.
But Chris, Roblox is an interesting
desire at all to do it.
But Roblox is a very interesting case study, and it's going to happen on the blockchain here very soon. Roblox is talking to some serious blockchain developers, and why? Well, because Roblox was the first game that allowed you to create your own environment and monetize it. And there are kids out there that are 15 to 20 years old making millions of dollars a year because they've created some environment and they get a royalty on how many kids use the environment. And now there's this incentive to be a coder at the age of 15 because you can get rich creating a world for people to play in. That's powerful stuff. That's incredible. That will be on the blockchain here soon.
Man, you know what I got when I was getting into my teens? You know what I did? I got to mow lawns, man, and deliver newspapers. That's what I got. There was no $1 million coming out of that at the time.
Well, we live in a different age, buddy. I played football when you got a pat on the back and some shots in your neck when your neck was hurt. Now the kids are getting $3 million
contracts,
second string guards.
Just you're like, you know what? You're lucky you went out and did what you did. You built the company you got, because otherwise, if you were a 9-to-5er working for somebody else, making your $50,000 a year or whatever, you'd be looking at it and be like, seriously?
Well, there was a podcast with Vince Young, who was a teammate of mine, and Johnny Manziel, who was the all-star at A&M, and they were talking about what if the NIL deals were around today, because both of them commanded so much star power when they were at their schools. They could have monetized themselves to the nth degree, and both of them said the same thing. Well, we wouldn't have gone to the NFL. We would have been so fat and happy after our 4 years. It would have been a joke. We would have been on every commercial.
Manziel, that might have been the best thing for him, because Lord knows, unfortunately,
exactly right.
He fell down the hole there when he went pro. And oh man, but yeah, living in Texas, and Texas football is huge, and whether it's high school or collegiate. And so, yeah, I remember when they were quarterbacks at their, at UT and then at A&M there, and just how huge that was. I mean, we could even look more recent. We could look at, I don't know. There was a certain quarterback over there at Texas Tech who hasn't done too shabby for himself as a pro.
Listen, there's too many of the names to list, honestly, not only at Texas, but just think about the LSU Tigers and that transfer. Who's their quarterback that came in and won the national championship for him from the JUCO college? You know who I'm talking about, though. He's
not off the top of my head, no.
He plays he's the quarterback for the Bengals, I think now, but absolute stud. Transfers in, wins the national championship for them
real quickly, it was Joe Burrow who came to LSU, and no question he came from a JUCO because he came from Ohio State. So absolutely, that's a JUCO school, no question.
Oh, did he not come from a JUCO?
No, he came from Ohio State, but academically they are like a JUCO.
I know, but I'm trying to fit my fact. So but anyways, I want you to think about in the future when NIL's on blockchain, and I know some companies that are working on this, where essentially alumni could lock up in escrow in a smart contract, $10 million to get a kid to transfer and come win the national championship for school. It'd be a hell of a way to incentivize kids in a way that's trustless. And but I'm not a proponent for that, just because I think amateur sports should remain amateur. But for the NFL, I think it would be awesome. Or an endorsement deal where it's built on the blockchain and issued as a smart contract. That's coming around the bend.
I think the only reason why that really got pushed with the NCAA was because these colleges, especially when it comes to football, let's face it, guys, you, Tillman, being up there at the elite with the college football, man, these programs making tens of millions, hundreds of millions of dollars a year off these off these guys like yourself that come in there and play, it's kind of tough. I mean, I'm with you with the amateurs, stay amateurs, but at the same time, man,
yeah, but there's a way to lock it up. Here's the thing that you get in danger of. Okay, I went back to a class reunion. All my football friends were there. And there's a real camaraderie of brotherhood there that you cannot get anywhere else. And I've not found it anywhere else in my entire life. That is because we were broken down as individuals into a team. So when you come into a school as an individual going, how much money are you going to give me? You can't break that person down into a team. You can't build a foundation for a team unless you can get them like Nick Saban has, like our coach has been close to doing, which is like you're buying into a program. And if you subject yourself to this program, you're going to be a better man. You're going to be a better football player. You're going to have a better career. You're going to be respected. Like if you can get 125 adolescent men to buy into that versus cash and Lambos, good luck. You're one of the two schools that you can pull that off. That is a dying art, and you have to at some level preserve it. So there's ways in which you can put the money in trusts and release it when they get a degree, or release it at stages like 21, 35, 45. Some way that protects them from the predatory nature of the financial management industry and getting that type of lump sum. Like there's better ways to handle this, and I think blockchain and transparent finances and those types of tools are going to be instrumental in changing the industry, just like every industry.
So in the chat, they're talking about, somebody saw that Jay Powell is going to resign from the Fed here shortly. They saw it on X, and they want our thoughts and opinions on what the market's going to do. So here's my opinion. I don't know, 3 to 6 months, the market will probably be higher. Nothing meaningful short term. We bombed Iran and nothing meaningful happened, and we went higher. So there's my thoughts on,
my thoughts are the market will respond very, very favorably. And I'll tell you why I think they will. Because I think with every single thing that pans out in Trump's favor, there's more trust that's being built that he knows what he's doing on the economic front. And I think this would be an extension of that. I think people would see it as a victory in the Trump camp, that he got what he wanted, and that the appointed next person is going to come in there and lower rates. Like that would be my assumption. And I think Trump's basically I would assume made that a prerequisite to the next guy in line. So I would think the markets would just go, it would pop pretty good, but
I'll give you guys the technical analysis answer, which is markets, the trend's already established. News events are knee-jerk reactionary, whether they go with or against the flow of the overall trend. And so usually when people say, oh, such and such caused the trend to turn, it's usually something that happens after the trend is already turned and is already going in the other direction. So, the trend is up. So ultimately, I think the trend continues higher, regardless of whether there was a knee-jerk reaction pullback or pop-up forward with, if that were to even happen. I don't know that that's real. I can't find anything confirming that anywhere online at the moment. I've been looking. So, again, people want to believe, oh, Powell's the problem. And if we get him out, all of a sudden, interest rates are going to drop and, and money's going to come pouring in. And I think a lot of that is very, very myopic, a very short-sighted understanding of what's going on overall. But, people are going to trade on the knee-jerk reaction stuff.
Just in the last 5 years, we've had COVID, we've had an election, COVID, extraordinary inflation, another election, assassination attempts, another exchange of power, tariffs, Iran. That's just 6 or 7 things off the top of my head in the last 5 years. All the while, news organizations behind me, they get ratings from pure negativity, right? Like people don't tune in to hear about lollipops and candy canes. They want to, blood in the street. So
and they
it's
sensationalize
always negative. And over the past 5 years, we're up, 100%, 100, whatever the numbers are. They're just huge. There's no, what's the Lynn Alden saying, right? There's no stopping this train.
Well, I mean, if you go into a casino and you're sitting at the table, you're a guaranteed loser. If you sit behind the table and you bet on a player, you could win some. But if you bet on the casino winning, you're a guaranteed winner.
Yeah.
And betting on the money printer turning on and betting on interest rates coming down, I think are safe bets. I think that's betting on the house. Now, will the house take a losing week here and there? Yes. Will the house even take a losing month here and there? Yes. But the house doesn't take losing years. And when it does, big changes happen. So I just cannot see a universe where interest rates don't go down and we don't keep printing cash. And those things directly provide stimulus to the economy. Like those are the strongest levers we have to get things spending again. So I just can't see that not taking place. I don't see a universe where that doesn't take place.
Well, like I said, 7.4 trillion sitting in money market funds, just waiting to be unleashed. Unleash the Kraken. Let it go. Let it take. Just markets higher. Again, I continue to say we're going to continue to go higher. Nothing's changed. We've had in the last year, we've had 3 decent pullbacks, starting with August 5th of last year. The whole, oh my God, the yen carry trade's over. And then, we were like, no. Monday popped right back up, and continue rallying. We've had 2 other times since then, and they've gotten lesser and lesser on the strength of those pullbacks, including the last one here that Andrew brought up earlier, which was the Iran thing. So, I mean, there's that mountain of buying that continues to prop it up. You've got the wall of worry, which has been just continually ridden up here. And, and if you're a retail trader, it can be tough. Emotions can be tough. Again, you bring up the great points here, guys. You're talking about, about media, and to a lesser extent, or maybe even more of an extent, mainstream or large social media accounts, which make money by sensationalizing things, especially the bad news. That's what the algorithms have learned.
Dude, we bombed Iran's nuclear capabilities, and everyone has forgotten about it 3 weeks later. Like, unless I brought it up earlier, we would not have talked about that today. That's the only reason we even remember it, because I heard Tom Lee say something about it yesterday, and I mentioned it. That's it. Nobody remembers it, and it was 3 weeks ago, right?
Yeah, 3 weeks ago. Just
wild.
It's crazy. If you're as old as us, as experienced and wise as we are, let's do that. If you've been around half a century, it really what Andrew's saying really is kind of just mind blowing. Mm-hmm. Because up until that point, anytime this had happened, any other time since we've been alive, it would have been so significant and so ongoing. But here we are. Really appreciate you guys sticking around here a little bit longer and keeping the talk going. I really think we had an amazing kind of a show today. We kind of talked about a lot there and really pushing, the narrative of what's potentially to come here, what looks like's lined up and's coming. Everything
I
that's
just
really
appreciated that Andrew didn't interrupt me during my nerd rants today, and I really appreciate it.
Because I was falling asleep. I was like, is this really what we're going to talk about today?
Well, I love that everybody talks about how much they hated math in school, and Tillman makes it a point just about every episode to bring up math. He's like, Tillman's like this, I'm going to beat you over the head with it.
Listen, math is the language of the universe. That the smartest men on the planet spend their entire lives trying to understand math, literally their entire lives. So, we probably should take a page out of the playbook.
There you go. As always, man, really appreciate you guys showing up and everybody joining in here. We had about 1,500 people joining in during the live stream, which is great. Do us a favor. Follow us. You can follow me at TXWest Capital. You can follow Andrew at AP_Abacus. And don't, folks, why he's going to make it difficult for you and have to learn how to spell abacus and all this other stuff, that's on him. But you can follow Tillman there at Texas OL61. Throwback to his college football days there. He's trying to make it easy for y'all.
Yeah, TexasOL61.com.org.web. Okay,
hey, speaking of Mark in the chat, thanks for bringing it up. We are live in Canada. Our partnership with Kraken is up and live, and we are taking on all Canadian customers right now. You guys are our first batch of customers we're putting onto the Kraken platform. So if you are one of those people and or you have a Kraken account and want to try the software, reach out to us. We'll help you get started.
There you go. As always, remember, folks, the only thing you control is how much you lose in the markets and in life. So please always be working on that risk management. Don't YOLO it. Life's too precious, man. All right, guys, I will see y'all next week. And hopefully everybody that's joined us in here. Until then, y'all trade safe out there. Have fun. Don't get ahead of yourselves, and make more money to put more into Bitcoin. There you go. Take care.
See you guys.